So in this video, we're going to cover candlestick patterns. And in my most previous video, guys, I hope you guys watched that. We covered two of them. We went over how to understand candlesticks, as well as I even dropped a video on how I personally trade candlesticks to find the best setups in my favor, how I use them to find my entry. And in this video, we're going to cover candlestick patterns. So you guys can screenshot these as for cheat sheets so that when you guys see something familiar that you guys are seeing off of this video, you guys can go back to and refer on those photos that you guys saved. I'll give you guys a quick second to screenshot this one as well. But let's get right into it and not waste no time. What we'll be covering in this video is how to spot a pattern forming, as well as when to enter on a pattern. But first, let's cover a few examples, as well as I'll even go over a recent trade that I did just using candlestick patterns. One key tip that I really want to leave you guys with, which is vital, and I say it through all my videos that I drop, is the fact that the higher the time frame, the bigger the move. If you see a 4-hour pattern, it's going to be a massive move to the upside or downside, considering that if you're watching the 5 minutes, it's not going to be that big of a move. Just keep that in mind. Now, give me a few moments to cover a few examples of what patterns look like in the market, and then we'll go over the breakdown of them, when to enter, as well as I might even share the screen on the stock market on the live chart to show you guys exactly how I see them as well. So the first example of a pattern, guys, is on the SP 500s on the 5-minute time frame. You guys can see we have a nice bullish flag to the upside. Now, what makes this one so great, and this is probably the best setup ever, is because the fact that it's on a support level as well. Big candle break to the upside with a nice bullish strong candle, long way to the downside, indicating that buyers are stepping in. And overall, anybody would have took calls, they would have printed nice money. Now, in the second example, there's actually 3 patterns here, and I do want to be mindful and let you guys know that not every single pattern is going to be as beautiful as the cheat sheet photos are. There are going to be a few that are a little bit slanted, a few that are not perfect, but they do help you identify where the trend is going, who's more in favor, and what to potentially look for. For an example, before the market even opens on the SP 500s on the 5-minute chart, we get a nice pennant here. Higher lows, lower highs. 5 minutes before the market even opens, we get a break to the upside. Then at open, long wick to retest that pennant, and you get a nice break for buyers to the upside. Continuation to the upside. Now, like I said, this is another pattern here, but overall, it's very ugly, and I want you guys to understand that. And we're even going to cover a few ugly patterns as well to show you guys that not every single pattern is going to be perfect, but overall, it does help you determine where the trend is most likely going to continue on. Then you get a nice bullish flag on a nice support, ultimately a nice break to the upside, and we continue on for buyers. Now, like I said earlier, the higher the time frame, the bigger the move. Now, this is on the hourly chart. I know it says 65 minutes, and if you guys are curious why I watch 65 minutes over the hourly, you guys can comment down below, and I'll answer you guys' questions. But overall, connect these wicks to create a lower high, connect these wicks to create higher lows. It's getting nice and tight. Candles are squeezing, and overall, on the hourly time frame, you get a massive big break. Now, I like higher time frame pennants or flags or bullish patterns or even bearish patterns in general because they usually pop out and pop down really massively. Whether it's bullish or bearish, it has a big move. That's something that I want you guys to understand. As well as you guys can see, even in the pre-market on the hourly, we're getting nice and tight here. Market's not really going nowhere. It's just creating a bullish wedge. Now, here is a bearish setup. It is a reversal. It is called a head and shoulders. And the reason why is I'm not too sure who's calling these names out or who is coining these, but these is a weird name. Overall, all it is though, is this is the left shoulder right here. This is the head right here. And this is the right shoulder. It does not look anything like a head and shoulders, but overall, this is a market pattern that people like to watch for. And this is probably one of my favorites as well, because when it does show, it tends to drop pretty hard. Now, on the 30-minute time frame, there's actually 2 of them here. But let's talk about the first big one, the massive one. You get your left shoulder right there, you get your massive head right here, and you get another right shoulder right here, which ultimately drops us down really hard. Even a retest in the pre-market and continues on down. Now, there's actually 2 of them, like I said. Even in the general area right here, you get your left shoulder right here, massive head, and a right shoulder. And look at the drop on this one, guys. Massive drop. If you would have entered right at open, you would have got paid so much money. 30-minute time frame, mind you that. Here's an example of something that does not look like a perfect pattern, but this one is called the head and shoulders. It's what we just went over right now, but it's slanted, as you guys can see. Now, like I said earlier, not every single pattern is going to be perfect to the T. It's not going to look as like these photos right here on the right, but the only reason why it's very important to understand patterns is because it tells you and helps you understand where the momentum is likely going to trend to, which in this case, guys, let's go over it. Left shoulder, the head right here, right shoulder. Look at this break of trend. If you were to connect these wicks right here for an uptrend, this candle right here itself breaks that trend. Enter puts, and you would have got paid nicely. The last example is a cup and handle, and this also is not the best perfect looking cup and handle, but overall you get a little bit of a cup here, a little bit of a handle, and it breaks up to the upside. You guys can see on Tesla. Now, this is the actual trade that I actually took myself, called it out in the Discord as well, but you get a little bit of a cup, a little bit of a handle, get a nice break, and even a nice little red candle for a retest as well, just like this one right here. It's not the most perfect setup, but it's still there. It's very important to understand these because it helps you determine whether you actually plan or trust or be confident and to take calls on this position. Now that we went over the examples of patterns, let's go over how to spot a pattern forming, because patterns most likely are going to form on your support levels or resistance levels and just wait for us to continue on up or down. Now in this case, you guys can see we're already trending down, bounces on up from the support, creates and start getting tight here, because that's what patterns kind of do. They kind of start getting tight, showing you that there's a decent amount of consolidation here. And in this case, guys, we're trending downward, lower lows, higher lows, but ultimately we came from a downtrend, and this is when you get your break of pattern. Now on Google or just in general on these cheat sheet patterns, it's telling you to enter as soon as you get a break to the downside off of the pattern, which many times patterns fail as well. It's something that you hear amongst traders as well. So what I like to do is wait for an actual candle to close below my support, and then I enter for a put position. Now you could enter as soon as you get a break of the pattern to the downside, which does tend to pay, but what I've noticed is that sometimes they actually like to come to retest them and sometimes even fail. So what I like to do is if it's coming down to my support level, I actually wait for the pattern to show me confidence that this is a bearish setup, a symmetrical triangle. And as soon as we get a nice candle close, I'm taking potential puts to the downside, and that's when I'm getting paid. Reason being, guys, is because the way that I use patterns myself is I just like to determine and be confident in a specific setup. Now, if I was planning on taking puts below the support level and we have a nice bearish pattern, that is a reason to be more bearish. Now, if it kept creating support here, did another kind of support here, and then we break below, I'm going to be a little bit iffy. But if we get a nice bearish pattern, specifically the symmetrical triangle, I'm going to be more confident that we're most likely going to break to the downside. Now, the most perfect setup in my opinion was this bad boy right here, because you get a nice flag pattern right on a support level, guys. Right on a support level. That's very important. And if you pull up the candlestick strength chart, you guys will understand that this candle is representing a 5 as well as even a 4. Mostly a 5 though, because how big the body is. But look at the long wick, guys. That is a long wick to the downside, indicating that buyers are for sure stepping in. That's very vital and important to understand wicks. So if you didn't watch my most recent video, I highly suggest you do, because the wicks to the downside is what indicates that buyers are stepping in, and ultimately we get a nice bullish candle to the upside. Now, if I were to throw volume in here, which also is another technical analysis tool or indicator that you need to understand and read because it's vital to trading, you guys can see that the volume is massive here, guys. Volume is showing you that buyers are for sure stepping in. They want it. Now, what I'm about to go over here is very vital to understanding and trading, because guys, let's talk about this picture right here. It's very important. I want this to be instilled into your brain for a long, long time. Now, as traders, we're finding the best setup in our favor. So in this case, guys, we're trending down. I'm looking more for puts in every single position I can find. In every single best trade setup I can find, I'm looking for shorts in this general picture. Reason being is because we're creating lower highs, we're trending down, we're losing all these support levels every single time, and we're breaking down. There's no reason to be bullish or taking calls. And in matter of fact, there's even a bearish setup, a bearish pattern forming for us to take puts. Let's talk about it. This is a bearish flag as well. A nice one, actually. Reason being is because, guys, look at this. We lost this support up here. Nice candle, break to the downside. Retest candle for some entries for some shorts. If you missed that, totally fine. You know why? Because not only do we bounce on the next support level, which is no reason to take calls unless you just like to take calls that bounces, but it's not my favorite type of trading. I like to follow the trend. And in this case, a nice break to the downside comes up to retest that support level. But look what happens, guys. While we're doing that, we start creating a nice pattern, a bearish one to be exact. And if you add a little bit of sauce in there and understand candlesticks, which is in the most previous videos we just went over, you guys will understand something that is so vital to trading. And only the real people that actually are disciplined and dedicated and watch all my videos will understand this. This right here is a bearish engulfing already. A little bit of a hammer candle. Bulls try to step in. But look at this candle right here. A nice reject candle right at the same area of that bearish engulfing. Two reasons to be looking for shorts. Bearish engulfing, nice reject candle, but on top of that, we even created a bearish flag. There's no reason to be bullish whatsoever at all. Then we get a nice break to the downside. Whether you enter there or not doesn't necessarily matter as much, but ultimately the trend to the downside continues, guys. Fat break to the downside after we lose that support, and ultimately, guys, we just keep on trending down. That's what I'm talking about. This is a very vital and important piece to trading, to understand that not only do you follow the trend, which we're trending down already, but you wait for a specific trade setup in your favor. Because if you miss puts here and you don't take calls here because you're following the trend and you want to wait for a put setup, you wait for something like this. This is a big, vital part to your trading journey to understand that this is a nice entry for some shorts to the downside. Best trade setup you can find in your favor in this open market. Now, there's another pattern here, guys, and I'm curious if you guys can see it before I even show it to you guys. But ultimately, again, we lost the support. We're below it. We're trending down. There's no reason to be taking calls or thinking, let me take some calls. No, don't do that. Matter of fact, there's even a pennant here, guys. A very small one. This is what I'm talking about. On a 5 minutes, it's not as big, but still we're trending down. It's a 5-minute pattern, but ultimately, guys, it's a pennant to the downside. Candles are getting real tight. They're not too sure exactly where to go. Higher lows, lower highs, and this is what a pennant looks like as well. There's even a few patterns on here as well, guys. And again, this is on a higher time frame this time. This looks like the 4-hour time frame, and it is the 4-hour time frame. But look at what's going on. We're trending downwards, guys. We're trending down. There's no reason to be thinking we need to take calls anytime soon at all. Matter of fact, market is in a bearish mode. Look at all these patterns that you did not even notice or see when you're just looking at these charts. We got a nice flag here. Candles are getting tight. Grab all the wicks and just connect them. And maybe I'll even, in my next video, will show you guys how to create them and how to connect the wicks. Or I'll even add it at the end of this video. But overall, you guys can see a flag pattern. Trends on down to the downside. In this case, we start creating a bullish pennant. We start trending up a little bit. Bullish pennant. Nice break to the upside. But we still trend on down. That is how you spot patterns in the market. And like I said earlier, patterns are not always going to be perfect. But you get a nice bullish flag here as well, guys. A decent bullish flag here. It holds that support. Every single candle does not close below that support whatsoever at all. Holds the support, almost rejects there, but ultimately breaks to the upside. So now that we went over how to spot a pattern forming, let's go over when to enter on a pattern breakout. What pattern is forming here on pre-market high? Guys, this is vital to trading. I hope you guys are paying attention because look at it. Look at it. This is marked off as pre-market high. This is the highest that pre-market hit. Sells off to the downside, long wick to the upside, sellers step in. Couldn't get a candle close above pre-market high, but ultimately now we're breaking above pre-market high. What pattern are we creating here? We're creating a pennant. Candles are getting real tight. They're not necessarily going anywhere. They're just consolidating, creating lower highs, higher lows. And this is where you enter, guys. You enter on a candle close above. Now, you can either wait for a retest, but a lot of times they don't like to retest. Sometimes they just like to continue on up to the upside and break. That would have been a nice trade setup if you would have took that. Just based off using technical analysis, understanding candlestick patterns, and understanding that we're not getting any candle closes below this pre-market low. We're holding it. Look at this one. This is my favorite. Head and shoulders. Left shoulder, higher head, right shoulder, and this is where you enter. Whether you entered on the candle after the close or right at the candle close, you would have got paid. You would have printed nicely. And it continued on down to the downside, guys. Very important to understand candlestick patterns because they just tell you where the momentum is most likely going. Now, we already went over this setup, but ideal, nice setup entry is something like this. Again, lots of volume, right on support, bullish flag, massive candle, bullish engulfing to be exact. Now, there is something called an inverse head and shoulders or an inverted head and shoulders, whatever you want to call it. It's basically just the opposite or flipped version of the one that we just went over. There's your left shoulder, there's your head again, and there's your right shoulder. And the way I created this quick zone, I have a zone right here. And the way I created it was grabbing this high of this candle right here, grabbing the high of that candle right there, and just creating a quick box. And ultimately, it's even telling you on this candle chart cheat sheet, it's telling you to enter on this candle right here. This one is perfectly to the T. To add candlesticks in the mix, guys, we even get a bullish engulfing before the candle even breaks to the upside. Before we even get a break to the upside, you get a bullish engulfing. Now, this is not a 5-minute time frame. This is actually the hourly again, guys. The higher the time frame, the stronger the move. If I was watching in 5 minutes, I probably wouldn't have seen this. Now, we're almost done with this. We have just a few more slides to get through. But guys, this is the bonus example of a real trade that I actually took. And I even called it out in the Discord on the trade on my own tab. And it's meta. I said I like meta setup for calls above 329. Gonna be patient though. We got speakers. But ultimately, this was the candle pattern right here. Now, this one was a cup and handle. It's very ugly, but you guys can see a big old cup, a big one to be exact. This is my call level, 329. Just like in the Discord, I like calls above 329. Gonna be patient though. The very next day, we got a little bit of a handle. Look how tight the candlesticks are getting. They're not getting anything below. They're just staying real consolidated. Nice bullish candles, cup and handle. You guys can see it. There's the cup, and here's the handle, just like the handle right here. Now, let's go over in the live chart and show you guys a couple patterns as well. And let's talk about them, what could have been an entry, as well as where I recommend to enter and how I use them just in my favorite, guys. So this is where the real sauce begins. And this is how I made $314, guys, trading just 2 trades today. But I also, one of them, I made $174 off NVIDIA off of a single head and shoulders, guys. It's very important and very vital to trading. Because I use candlestick patterns a little bit different and people are always iffy about them. This is how I use them in my favor. Because in the trade ideas tab, I already said I'm pretty bearish on NVIDIA. I have a put level below 121.80. Reason being is because look at this, guys. It's very important, and this is how I spot my trade levels, as well as not even that, how I use candlestick patterns in my favor to determine whether I'm going to be confident in puts for sure. Now, every time we hit this level, we get a nice reaction. You guys can see twice already. And it's also even Thursday's lowest low that it hit that single day. So that is a nice solid level that I plan on taking puts below, which is how I made 31%, which on Friday, which is yesterday, I posted my gains, $314. And you guys could even see I even posted what it looked like after. It basically did exactly everything that I drew here to the T. But let's talk about it. Now, we just went over how to understand and read candlestick patterns. I know you guys see it, a left shoulder, the head, and the right shoulder here. Now, how did I use it in my favor to take puts? Now, guys, I use everything in my favor technical analysis wise to understand that we're most likely going to break to the downside because of very simple rejection. For an example, every time we hit this 78.6% Fibonacci retracement level, or even to be more specific, this zone as well that I have drawn out, we keep rejecting it. Every single time we're rejecting it. Look at these candles, they're rejecting it. Not only that, but we have a nice bearish engulfing on the hourly time frame, which yes, this is the hourly time frame, not the 65 this time. We did a retest here in the pre-market, bearish engulfing below, which ultimately led me to believe that we're most likely going to drop here some more, even below that level that I presented, which on a 5-minute time frame, guys, like I said earlier, just follow the trend. We're trending downwards. There's no reason to take calls at all whatsoever. We have a bearish pattern on the higher time frame, as well as every single time we reject this level, we end up rejecting it pretty hard. So I'm looking for shorts all day, and I do enter shorts or puts, whatever you want to call it, but I enter puts at this specific candle right here because this is my favorite type of strategy, which is a break and retest. Reason being is because I don't take any trades here, even though I'm bearish already. I don't take any positions here at all until we get a nice break below this specific level that I mentioned I'm going to take puts at. Get a nice break. Most people would be scared and think that the play already ran without them. Candles come up to do a retest as close as you can get, and this is when I enter on this candle right here for a nice rejection. I even go on a 3-minute time frame to spot it, and ultimately we sell off here again hard. And this is where I take my money at. I sell for a full position out of 174, and that is how I very simply use a candlestick pattern in my favor when I'm already bearish and noticing that we're most likely going to drop here, which ended up paying me and printing me a good amount of money. And that is just one pattern out of many. But I want you guys to understand that you guys can do this too. Anybody can do this. Very simple head and shoulders pattern here. Let's go spot some more and show you guys some more. Now, this specific zone is called a bearish rectangle pattern. And I'm going to pop up the pattern here. It is called a bearish consolidation or bearish pattern. Either way, guys, understand that after we get a nice break to the downside, and we're most likely going to create bearish movement because it's long wick to the downside, losing this nice zone. But not only that, I even posted again in the Discord saying AMD, high watch for tomorrow. Nice break below bearish levels. Nice range, just like Nvidia looking to short tomorrow, guys. Look at this on a 4-hour time frame, losing these bearish levels, which we're creating a nice bearish pattern, which you guys can see literally the day after I end up shorting it and making $104 off of AMD itself. And you guys can see this is the reactions after. Look at the reactions after. Look how many times we reject this general area every single time, guys. I've actually played puts many days after just off of that specific area, off of this single pattern on a higher time frame. Now we are on the 1 hour, but you guys can see nice reactions, consolidation. And let's actually go on the 5 minutes to show you guys exactly what had happened here. So now I'm on a 5-minute time frame, and you guys can see it's kind of difficult to actually see it on 5 minutes. But let's zoom in on the day that I actually took puts at. So look at the reaction. Long wick to the upside. That's a bearish candle. Another bearish sell-off below the zone. And ultimately, guys, we're trying to create some nice bearish candles. We are downtrending, which is vital to understand. This is a downtrend. We're downtrending. We're not uptrending. We're not creating higher lows. We're creating lower highs and lower lows. And I enter puts on, again, the break and retest. I see all this reaction and I'm like, I don't want to enter here or do any of that action until we create a nice perfect retest type candle, which is something like this or even something like that. But ultimately I enter here, another nice bearish candle, and ultimately this is a perfect entry. So as you guys can see on the 5 minutes, guys, we're creating lower lows, lower highs. Ultimately, if you read the candlesticks and watch the first 2 videos that I've ever made, you guys will understand that this candle right here is a nice sell-off candle. Long wick to the upside, indicating that buyers are not stepping in. If you use the volume, you guys can see there's literally no buyers whatsoever. Even on the next candle, straight seller candle all the way through, creating lower highs. Yes, we're trying to buy up a little bit, but ultimately we reject here again, another reject, and we keep staying below this zone. So you know what I do? I'm watching all that action and I'm realizing we're most likely going to come to retest it one more time, and this is where I enter. I enter on this candle right here because not only do we get a nice doji reversal candle, but also we get a nice sell-off candle again, and on the next candle we sell off real hard, and that's where I get my nice entry. Understanding that on a higher time frame, on the 4 hour to be exact, we're creating this nice bearish rectangle type pattern. below all of these levels that we already called out, saying that we're losing specific levels, which gives me more confidence. But on top of that, as soon as you see a bearish pattern in your favor, that's even more confidence, guys. Now, if we're uptrending and creating higher lows, higher highs, and doing a nice bullish trend, and then I see this pattern, maybe I wouldn't take it. But since we're already downtrending, creating lower highs, lower lows, the trend is more in our favor to ultimately go on the 5 minutes and understand that we're most likely going to reject for a nice entry, and we do. And let's even talk about the days after, because best believe I traded this stock so many times, and you guys can see, look at the reactions here, guys. Again, another reject candle, lots of retests, lots of wicks to the upside, indicating that wicks are selling off, sellers are stepping in every single time there's a wick to the upside. And this is where I enter off this candle right here. I was a little bit late to the party and I ended up selling, but guys, every single time. Now on this day right here, guys, you guys can see nice rejection candles, long wicks to the upside, no candles whatsoever on the 5 minutes close above this zone at all whatsoever. Every single time we get long wicks to the upside for a retest, and you do your best to try to enter as close as you can to the zone. I see that we're rejecting here again, and this is where I get my entry. I see a long wick to the upside and I enter just in the middle general area, because I was very confident that we're most likely going to reject again. And we do every single time. Now on the next day, I actually missed it, but you guys can see long wick to the upside, touches to retest, and I don't enter there at all. I actually missed this day, but ultimately you guys can see how many times you guys can play off of this specific zone. Bearish rectangle type pattern. Pre-market's getting some rejections, and that is how I use candlestick patterns in my favor to understand and spot specific single trades. And I'm also even pulling up the Discord to show you guys as well that I'm not lying when I'm pulling out these trade ideas. They're not coming out of thin air. I've actually traded these myself to give more credibility, to show you guys that I'm actually spotting these live market, in the pre-markets or after hours, and spotting these trade ideas in my favor so that I can take them and profit off them. And you guys can too. Now let's go over a few more to see what we can see. Maybe you just, oh, look at this one right here. Look at this one, guys. I don't believe I traded this at all. I don't remember trading this at all, but I do remember spotting it out. Now you guys can see, I actually drew a pattern out here just scrolling, and you guys can see, nice break to the upside, even comes to retest a specific area and continues on up. Patterns are very vital and important to understand where most likely the direction is going to go, whether it breaks to either direction. But ultimately, guys, I don't trade this one, but I'm just noticing that, yeah, there was a pattern there. Now I'm on the hourly time frame, guys, and you guys can see on Tesla, look at this little pattern here. Higher the time frame, the stronger the move. You guys can see, connect these wicks, and you get a nice bullish pennant, massive break to the upside. And this is what I'm talking about, guys. Use these patterns in your favor to understand where the market's most likely going to go. Now, I don't want to ramble on or make this video longer than it needs to, but I just hope you guys understand how I use patterns in my favor, because I already spot or find the direction that I'm most likely going to head in, as well as when I see a pattern, I know it's going to be more in my favor if I'm already bearish. It just makes it a lot easier, guys. There's a little bit of a head and shoulders here, nice break of support here, continues on down. And ultimately, guys, that's going to wrap it up for today's video. I just hope you guys understand that patterns are most viable and useful when you already see a trade set up in your favor, and whether you're bearish or bullish, but you just see a bullish pattern on your support level or head and shoulders pattern on your support level as well, and you take the direction that it's most likely going to head to, as well as using candlesticks, volume, and everything else in your favor to understand these trade setups. So I hope you guys understand this one, and I hope this video helps, and I'll catch you guys on the next educational video.